Now, I realize I haven't talked about SOFI in a while, so for anyone who's thirsty for an update on my stance with this stock, look no further. I'm holding SOFI in my main portfolio right now, and I haven't sold a single share of this company because I believe they have the potential to truly be a huge player in the space of neobanks. SOFI is essentially filling the niche in the financial world for people who want a platform that allows them to fulfill all of their financial needs in one place. So in this video, I'll discuss why I think SOFI is such a great company, and I'll quickly go over their recent financials. And then I'd like to discuss an event that, when it occurs in 2022, will be an absolute game changer for SOFI. So whether you want a checking or savings account, a portfolio to invest in crypto and stocks, or a loan, SOFI is offering all of these services. And the fact that SOFI's Q3 earnings were insanely impressive, SOFI is a stock that I'm very excited to continue to hold, and will plan on averaging down in my position if we continue to see the volatility in this stock. So yeah, for anyone who hasn't been keeping up to date with SOFI, this is a video for you. And like I said, I'll be going over some important aspects regarding their financials, and at the end, I'll discuss if I think SOFI is a buy right now. Okay, so we know that SOFI is kind of a one-stop shop when it comes to finances, but what else do they have going for them? Well, we're starting to see SOFI's synergistic business model paying off in the form of increased adoption of its products in its existing user base, which is exactly what SOFI is aiming for. And what this means is, let's say you're someone who wanted to start a SOFI account simply to gain access to a checking and savings account because a traditional bank that you're used to holding money in sucks. Now, SOFI's numbers are showing that once people are in their ecosystem, those same people are now much more likely to be receptive to SOFI's other services. So think signing up for loans to buy real estate or getting access to loans to buy Lamborghinis. And on top of this, we also know that SOFI's diverse revenue mix is shifting towards more financial services and technology products, which is seriously helping them trim up their losses. You see, many traditional banks lack the broad suite of services and the velocity that people demand in our digitally connected world. Simply put, the old school banks just haven't been able to keep up with the younger generation of people who want and need more out of banks. And as a result, the financial services industry is becoming much more fragmented, allowing new players to emerge and win market share. And I, of course, firmly believe that SOFI has the ability to win dominant market share over the course of the next decade. And I think this is going to be an amazing thing for investors in SOFI, because until now, I think that SOFI has been overlooked as a potential disruptor. However, the company's recent Q3 earnings report illustrates that it is on a mission to revolutionize the banking industry. And leading up to the Q3 earnings, SOFI was even given 3 buy ratings from equity research analysts. And while I think analysts are usually wrong, and I honestly don't listen to any of their opinions because a lot of them tend to be too short-sighted for the most part, I think this is still a good sign that SOFI is headed in the right direction. And as a result, SOFI's stock price increased nearly 60% from when the research reports were issued in September to the Q3 earnings in early November. But was this run-up actually validated? Let's dig into the results and see. SOFI set a new quarterly revenue record in Q3 of 2021 with $277 million in net revenue, which represented a 28% year-over-year growth. And although SOFI was actually originally a lending business, SOFI has been investing heavily in product development in an effort to build a mobile-first super app. And on this app, members can access the multitude of financial services and products that I mentioned earlier. And what mobile-first means in the world of software development is just kind of like it sounds. It means developers build the mobile app first, so that all the kinks can be flushed out, as building a mobile app that has a ton of features is arguably harder to pack into a smaller mobile screen than it is to build it out on a desktop-sized screen. This means that the best possible experience can be had on a smartphone at the start, before the features are then translated to a desktop experience. So back to the numbers. As of Q3 2021, SOFI's member base had 2.9 million users, and a total of 4.3 million products were being used by these individuals, implying that, on average, each member uses more than one product, which is another really good sign. This means that the total products used on SoFi's platform increased from 3.7 million in Q2 of 2021 to 4.3 million in Q3 of 2021, whereas new members increased from 2.6 million in Q2 of 21 to 2.9 million by the end of the third quarter. And the fact that SoFi's product growth exceeded its member growth in absolute terms in the third quarter, to me, strongly indicates a high product satisfaction from their customers and a great willingness to adopt additional products. And like I mentioned earlier, this also reinforces the value of their business strategy. In fact, SoFi is recognizing higher adoption in financial services and technology products and is becoming less reliant on its legacy lending business, which accounted for about 80% of their total revenue in 2020, while the financial services and technology products accounted for less than 20%. Alright guys, I'm almost done talking about their financials, and then I'm going to get into some really juicy stuff. So Q3 of 2021, their lending business is now comprised of 75% of their total revenue, while the financial services and technology have increased to nearly 1/4 of year-to-date revenue. SoFi also achieved record volume in both personal and home loans, which was up 166% to 26% respectively year over year. And given all these recent amazing numbers, the growth in additional product offerings is particularly engaging. Okay, so by this point, you might be wondering what the game changer for SoFi is. Listen to this. Morgan Stanley was one of the 3 investment banks that issued a buy rating for SoFi, and a big part of the thesis is the prospective approval of SoFi's bank charter, which Morgan Stanley expects in early 2022. And what a bank charter would do, and why it's so important, is that it would make it easier for SoFi to partner with other companies and offer sweep accounts, as well as win access to FDIC insurance warehouse facilities, among other financial services. Morgan Stanley even noted that SoFi's approval of its bank charter could boost total revenues by 10% within the first year, solely based on the benefits of gaining access to the same low interest rates as other banks. Now, whether these numbers are exactly possible, I'm not sure, but I think it'll be a good start for boosting revenue nonetheless. And a bank charter, in my opinion, could quite literally be the game changer that SoFi is looking for. And I think the prospect of this charter itself has led to the run-up in the stock over the last month. So with that being said, I think it's also important to keep in mind that SoFi has other opportunities that aren't contributing to its revenue growth yet. For example, SoFi partnered with Pagaya in late October, and Pagaya offers an artificial intelligence infrastructure that enables financial technology companies, banks, and other loan providers to offer increased access to financial products outside of traditional credit models. Pagaya's machine learning models also aim to reduce risk for lenders and help better inform credit risk. And to date, Pagaya's partnership with SoFi is the largest deployment of its technology in the financial technology market space. And this partnership is also meaningful because it allows SoFi to offer its services to a broader audience without taking on any additional credit risk. So, with all that said, do I think SoFi is a buy right now? Absolutely. SoFi is at the very least worth keeping on your radar if you're looking for exposure to disruptive financial technology investments. And its strong financials lead me to think that SoFi is well on its way to establishing itself as an industry leader. However, the thing to keep in mind with this stock is that there's most likely going to be some short-term volatility. However, the stock seems to be finding some strong support around the $14 and $15 price mark. So I would argue that anything around and below these price levels is a steal for the company, especially when you consider that SoFi is investing heavily and continuing to increase its product suite, which will help drive and increase their revenue over the next decade. So yeah, all in all, I think SoFi is a fantastic company and a great long-term buy and hold. And with that, I think I'll end the video here. Thanks to those of you who made it to the end, and I'll catch you next time.